Welcome to Markets Now. I'm Michelle Rook with Mike Miner with Professional Ag Marketing, and grain seeing some pressure. Livestock back to the plus side here today. And Mike, this pressure that we're seeing in the grains, how much of this is technical selling and risk aversion here with some of this macroeconomic noise?
I think it's got a lot to do with outside fundamentals. Over the past 3 trading sessions, we've seen crude oil pull back $6 a barrel. You've seen corn fall back about 25 cents from their highs over that same time frame. So it feels like it's a lot to do with money flow from large speculators at this point, pushing this market lower. And so I would agree. There's a lot of outside activity. Dollar was up a little bit again today, which isn't going to help either. But there's some other things going on, and it all stems back to this idea that the Israel invasion of Gaza has been pushed back. They've been waiting impatiently for that to occur, and we just haven't seen that yet. So the crude oil futures specifically have really been pulling back since that hasn't been occurring, and they probably have the right to be a little impatient, Michelle, just because they're waiting for a lot of speculation that happens after that occurs. The impact of that happening doesn't have a ton of impact on actual S&D for crude oil. It's just everything else that can happen if that does happen. So that's kind of what they're waiting for.
Yeah. And of course, crude oil was one of the, I guess, few markets that did put some more premium in. So taking it out certainly makes sense. We also look at the corn market here. You mentioned lower crude oil weighing on those futures there. Technically, we did break below some support here today, didn't we, again?
Yeah, that 482 area did get broken, so we probably did have a little bit more with stop orders kind of trail and get hit, pushing the market down a little bit. About 9 o'clock this morning, we saw the market sell off 5 cents pretty aggressively out of nowhere. I think that had something to do with it as well. And this corn market does have a few things going for it. The ethanol numbers again this morning were superb. So if we can continue to keep that up and start to trickle in a few more of these purchases from the export market, maybe the demand side won't be sitting quite as bad of a position as what many were thinking.
Yeah, you would think this would be a value level for end users for sure. Speaking of end
Mhm.
users, soybeans, we did see China business this morning, but the market kind of faded that, didn't it?
Yeah, we continue to await impatiently for these purchases, and when I look at the export market for soybeans specifically, uh, China's got enough soybeans in Brazil coming their way until about November here, and then after November, Brazil's supplies are going to start to run pretty slim. This is going to open up the door for U.S. Exports into China during December and January, which they are slimly bought for that time frame. So we've got a tighter window than normal on our exports, I would say, this year, given the progress in South America for planting. It does look like Brazil will probably have some exports coming in February this year. We'll keep an eye on that with weather going forward, as it's obviously still early for them. But that's kind of the direction I'd be looking at right now in the soybean market.
Yeah, and soybeans have been following the meal market as well, which is down today after making new contract highs. So, is the party over in the meal market or not?
I don't think so. We might see some retracement here just because we went all the way back up to these old high levels we've seen a few times. So, up front here, the funds may see this as a little bit of a selling opportunity in the meal market. However, obviously, they're looking at Brazil and Argentina weather forecasts going forward, and there's a little bit of premium that they'll leave in that meal market just because of what they saw last year with Argentina. They cut their crop by half and then some last year out of the world's largest soybean meal exporter. So yeah, that premium is going to get left in a little bit longer this year, just given that we had that recent experience down there. But keep an eye on their weather patterns. And really, December, January is typically the time frame that we really like to talk about South America weather. So it's a little bit earlier than normal, which maybe they won't get too excited because of that. But down the road, that does tell me that maybe we're just getting started with some of this volatility in that soybean market again.
Yeah. And Argentina, obviously, until we get to that new crop, they are running pretty much short of soybean meal. So it's going to be a tight global situation for a little while. Okay, what about this cattle
Definitely.
market? We had the big correction and meltdown on Monday in reaction to the bearish cattle on feed report. All right, Mike, how much technical damage did we do, and can we recover from that, do you think, because we have such tight supplies?
Definitely. I have a strong indication that given where the cash market is, I think that's going to be a really strong fundamental to help these markets get another pop at some point. The supply situation has not really changed. I know we had some bearish news come out of that cattle on feed report on Friday. However, I don't think it changed anything in the grand scheme of things. We continue to roll the snowball down the hill, and it just keeps getting bigger. So, with cattle going forward here, to see the futures below cash at this amount at this time of the year is very odd. To see positive basis levels like this going into November, almost unheard of. So continue to watch that going forward, and really right now the cattle producers are in a spot where they've got the leverage. They know they have it. They don't have to feel like they have to be forced to sell. Recently, they've been encouraged to try to sell cash because of the futures market being below cash. And that's been a nice indication for them here real recently to try to get some stuff sold. And even before that, they were incentivized to try to put as much weight on and hold these things as long as they could because of cost of production was so low compared to where futures were. So going forward, I think the leverage is really in the producer's hands, and if the processors really want to take advantage of this steep sell-off, they're going to have to go to the futures market and go long futures. So that's the role of the commercial long, and I think that could help get a good pop in these cattle futures here again, given where this cash market seems to be pretty tight.
Yeah. Well, that's good news, anyways. What about the hog market? Are we close to a bottom here, Mike, after new contract closed yesterday and all but the December? We're seeing a little pop today. Is that just short covering? Is it a 1 day blip or not?
Yeah, I mean, the hog futures are oversold. They were ripe for a technical bounce. Lower prices should be a cure for lower prices at these levels, as both domestic and international pork demand for pork might increase at this point. But really looking forward, the cash and cutout for both hogs and cattle, I think, are probably suggesting that we shouldn't be quite this sold. So fundamentally, we're not quite as bad as what the futures are telling us today. They do not have much optimism in those further out months, but hog supplies, they're still pretty sufficient for what demand currently is, and that's left the packers in a position where they've got plenty of hogs coming at them for slaughter, and farms continue to move hogs as they're waiting a week or two for a higher cash price. But yeah, it's just you can't really wait that one out, I'm afraid, Michelle. So it's
Okay.
been a tough one in that hog market recently, but hopefully with a little bit of an oversold condition here, we can get some good news back into that hog market and try to get a little bit of a bounce. But at this time of the year too, that can be a tough one to come by.
Yeah, the funds have liquidated pretty much all of their length, so at least that's a little pressure taken off. But we got to get cash and cutout
Mhm.
values to bottom here too, don't we, Mike?
Yeah, we definitely do. The fund's pretty much flat at this point. They're probably not going to go crazy long. They historically don't, or too short. Historically, they don't like to go put on a huge short position in these proteins. So that's a good news, good sign, like you're talking about. Going forward, we got to see this cutout try to hold. We held in the 90s for quite a while, and that was a really good sign. But right now, at this time frame, cutout's not really doing quite what it probably should from a seasonal aspect.
Yeah. We have monthly cold storage out this afternoon. Is there anything that you normally watch for there, Mike?
Not a ton. Historically, it seems like that report has a tough time moving the market a
I
whole lot.
agree.
Just continuing to watch consumer demand and continuing to watch what type of inventories we have on that. Particularly, I'm really looking in the hog sector because of going forward. If consumer sentiment is starting to drop a little, if people are running out of savings, they may pull back towards more pork purchases, more smoking stuff at home, things like that again, and that would help some of that demand out on the pork side. On the cattle side, it doesn't seem to be a real problem on the demand side. It's mainly supply focused. I think the problem with demand on cattle going forward is the idea of a recession down the road that's really limited the ceiling on this cattle market so far.
Yeah, I would agree that macroeconomic picture, or at least the fear of that picture, has certainly been a factor in cattle. All right, thanks for joining us, Mike Miner with Professional Ag Marketing, and that is Markets Now.